At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Hi, ladies and gentlemen. It's Aaron Fragnito with the Passive Cash Flow Podcast. I'm here today to talk to you about an exciting experience our investors just had on a nice 11-unit multifamily property in Paterson, New Jersey. We were able to buy the property for a great price, renovate it, and refinance it, achieving incredibly great returns to our investors. So I'm going to break into that today. I'm going to talk about how we did far better than targeted on a nice mixed-use property in Paterson, New Jersey today on the Passive Cash Flow Podcast. So this property was purchased in 2020 by People's Capital Group here for $975,000. It was an 11-unit property on Summer Street in Paterson, New Jersey. And the property needed some work. It was definitely a mismanaged building. The owner had really not managed it right and had deferred maintenance on the property and was not treating the tenants properly. So because of that, some of the tenants had fallen behind in payments, and the building had a number of deferred maintenance issues that we had to fix throughout. We also had to get a green card with the state, fix a number of issues there, and just work with our lenders and try to find a good lender because the building wasn't making a whole lot of cash flow when we bought the property. But we were able to secure a mortgage on the property and negotiate a really good price as well with the seller. And we were able to negotiate that price down to about $975,000 to buy an 11-unit mixed-use property in downtown Paterson, New Jersey. So that was in 2020 actually, and we were able to then renovate the building, put about $250,000 into the property. And it wasn't all easy. It was actually, we had some challenges with Hurricane Ida at the time, getting some water in the basement and having to fix boilers and hot water heaters that had got damaged from that. And some more challenges as well in the construction, with some things costing more than we thought they would, which is a common challenge with real estate renovation. When you're renovating apartment buildings or really any piece of real estate, it's hard to always analyze that construction on point. So we did have some small overages there. But despite all these challenges, we were still able to accomplish incredible returns to our investors, way ahead of target. See, when we first analyze a building and underwrite a building, we're extremely conservative, right? Because we want to underpromise and overdeliver. That's how we've built our fund. That's why our investors continue to invest with us. And that's why about 90% of our investors remain invested in our opportunities. But also when we do that, when we overpromise and underdeliver, that means we assume a pretty conservative scenario, meaning inflation's not sky high, real estate values are not sky high, and interest rates go higher as well. So when we paint this picture and we underwrite a building and we do it conservatively, it sets the bar at an attainable level, generally looking to earn our investors about a 10 to 12% annualized cash-on-cash return. Okay. In this case, we achieved about a 49% cash-on-cash return in a 2-year period, or roughly a 25% annualized cash-on-cash return. So clearly we did about 100% better than targeted. So really an incredible opportunity here. We really knocked it out of the park on our performance here at People's Capital Group. And there's 2 reasons why this happened. First of all, we have a good infrastructure, an in-house management company. We bought the property at a good price. We executed our construction on budget. We executed on time as well. And we were able to really force equity into the building by renovating the units, leasing them out for top dollar, lowering our expenses elsewhere, and finding out more ways to make income on the property. We improved the common area, the exterior, and made it nicer to live there and smell better, and a building people could be proud of. And because of that, we got a much higher rent roll from the property overall. So that was one reason we executed properly here and did very well on our returns to investors, achieving our goal 3 years ahead of schedule. The other reason we achieved our goal 3 years ahead of schedule and it got about half our investors' capital back in just a 2-year period is because the market has been the wind on our sales here. It's been a very good market. I'll be a realist. Market values have grown dramatically since we bought the property. We had the pandemic bump here, so we were able to increase our The market values overall just naturally increased a lot. Rental prices increased a lot. So we were able to lease these units up for really incredible rental prices and achieve our rental goals and our refinance goals sooner than planned. So for two reasons: first of all, our infrastructure, our execution, buying at the right price, renovating it on target, getting it leased up for top dollar. And secondly, the market worked in our favor as well. So when these things work together, we're normally able to achieve incredible returns to our investors. In fact, just a few weeks ago on a 6-family, we achieved about a 45% return on investment in 3 years for an investor. So he'll be earning about a 15% cash-on-cash return on his investment in that property. And these investors here will be earning about roughly a 24% annualized cash-on-cash return on their investment here. So about 2 times what we initially targeted for their cash-on-cash return. So really incredible performance here on People's Capital Group. Congratulations to our investors getting a nice lump sum payout here, about half of their investment back within 2 years of investing in this building with us. Now, the best part about all this is that the lump sum payout our investors are about to receive is actually a tax-advantaged or tax-free payout. All right. The reason for this is because it's a refinance. See, we're not selling the building. It's not cash flow. This is debt. It's debt that Seth and I signed for, actually at a lower interest rate than we had before. So we actually lowered the interest rate, even though rates are going up. We had a 5.5. We refinanced into a 5% rate. So we've actually lowered our interest rate, which is crazy because we bought it kind of as a distressed property, so a bit of a higher rate 2 years ago. Now we're down as a nice turnkey asset, so we got a better rate, even though rates are higher now. So we lowered our rate, but these investors were able to collect that big cash out payout tax-free because it's a refinance of real estate. So we harvest that equity growth through the refinance that allows our investors to get a nice tax-free payout. And the incredible thing about all this is that when you do the refinance and pay our investors here the big lump sum, as long as they don't exit, they don't have to pay any income tax or capital gains tax on that payout. And it's a really incredible strategy to pay our investors, take equity off the table, harvest that equity growth, turn it into cash in our investors' pocket, and still allow them to not have to pay the tax man, not pay capital gains tax. Just an incredible strategy, and that's one of the reasons we love real estate, and that's the main reason we execute the buy, renovate, refinance strategy. In addition to it being a tax-free payout for our investors, the other reason I like the buy, renovate, refinance strategy is because now I still have my cash flow machine. I still have my tax depreciation machine, right? I'm still able to collect cash flow on a quarterly basis and distribute that to our investors. So our investors are going to enjoy quarterly cash flow checks from the building. In addition to that, we're going to refinance again in about 3 to 5 years, where they'll retain about half of the other half of their investment back, and ideally be made whole in the investment at that point. Still have their initial investment available. Still be able to exit the investment, get back their initial investment at any of the refinances. Now, doing that would cause them to have to pay capital gains tax. So a better tax strategy is to remain invested as we refinance for years to come and cash flow on a quarterly basis. But it's really an incredible strategy. The buy, renovate, refinance strategy allows us to pay our investors tax-free, continue to own the asset and cash flow on it, and then eventually grow that wealth over time and maybe 1031 into a bigger property down the road and defer all taxes. Really incredible long-term strategy to build legacy wealth, and that's what we offer to our investors. They don't have to exit any time. We don't buy them out or force them out at year 5 or year 7 like many real estate funds. Our investors can remain invested indefinitely, continue to build their wealth with us in a high-demand market here in North Jersey, and that's how you build legacy wealth. And that's why 90% of our investors reinvest over time, and that's why we look at real estate personally, my business partner Seth and I, as our retirement strategy to hand down to our family and our children over time. We love real estate as long as it's professionally managed in a high demand market. It's a great asset long term, and we see no reason to sell it and get rid of an asset that's allowing for cash flow and tax write-offs, right? It's a great asset. But of course, that exit option is there. Our investors can exit the LLC upon each refinance, keep the funds from the refinance, keep the funds from the cash flow, get back their initial investment. And then, of course, there are capital gains tax on those earnings. So say someone invests $100,000. We get to the refinance. They'll expect $50,000 back at the refinance. Let's say they made $5,000 on cash flow through that period of time as well. So the investor would walk away with $55,000 in profit. and then they want to get back their initial investment, they would get back their $100,000 as well. Now the IRS would say, okay, you invested in People's Capital Group $100,000. In this case, 2 years later, you walked away with $150,000 or $155,000 with the cash flow. So that $55,000 in profit is going to be taxable income. And to avoid that, you want to stay invested in the LLC. By staying invested in the LLC and avoiding paying taxes, that boosts our internal rate of return for our investors. Your internal rate of return takes into account your cash-on-cash return plus your tax depreciation. So if you add those two up, that gives you an internal rate of return, and that could be in the mid to high teens. In a scenario like this, where your cash-on-cash return is 24%, I would only assume their internal rate of return, depending on each investor's tax status, of course, is going to be between 30% or so. It's like 28%, depending on the time they're invested, everything like that. But the internal rate of return is going to boost your returns even higher. That takes into account the tax benefits, the tax depreciation. But keep note here that this large lump sum payout upon the refinance allows our investors to harvest that equity growth, put money in their pocket without losing the asset. And now they continue to get cash flow from the asset on a quarterly basis and large lump sums upon the refinance as well. And as long as they choose not to exit and get back their initial investment, all that money coming in is essentially tax-free money. So really an incredible strategy here to buy, renovate, refinance property. In this case, it was a mixed-use property with a storefront and 10 apartments. Right now, we're working on a 63-unit apartment building. We also achieved this with 6 units, mixed-use property, big properties, small properties. So we've been doing this for years at People's Capital Group. Like I said, we normally target a 10 to 12% annualized cash-on-cash return. Recently, we've been achieving 15 to 25% annualized cash-on-cash return. So really overachieving here and under-promising, and that's what we focus on at People's Capital Group. So if you want to learn more about how we team up with investors and how to qualify, because we actually have more opportunities than we do we have more investors, I'm saying, than we do opportunities. So right now our opportunities fill up very quickly. It's very, very hard to find a discounted apartment building for sale in New Jersey. When we find that discounted and mismanaged apartment building for sale in New Jersey in a high demand market, we snag it very quickly. We put the capital out, we raise the fund, and then we move very quickly on the property. And our investors move quickly as well. So since we've delivered through the years and underpromised, most of our investors reinvest over time. So if you want to get qualified and get on that investor list, go to peoplescapitalgroup.com, set up your discovery call, fill out the basic application form, and let's connect. Let's see if you're qualified to invest with People's Capital Group. We accept accredited and non-accredited sophisticated investors. We operate a 506B, so we help people with experience and people getting started in real estate invest in our real estate fund. Our minimum investment is $30,000, and we only work with qualified investors. So this is not a solicitation for funds. This is not tax advice or legal advice. But what I can tell you is we just overachieved incredibly on an investment here for our private investors, and we're lining up our next fund right now, which has a really great opportunity for our investor group. So if you want to check that out, you want to learn more about our opportunity, go to peoplescapitalgroup.com. Also subscribe for more podcasts every week on the Passive Cash Flow Podcast. Have a good day.